Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Wednesday, July 15th, so halfway through the month of July, just like that. Theme of the day, we'll get right to that. Big gap up day, and a lot of rotation into what I refer to as the opening trade or reopening trade. That was in full effect today, and the small caps shine today. So again, we've been talking a lot about rotation this week, and then that was kind of hit into another gear yesterday with the Moderna vaccine numbers that came out, the trial numbers. So the way that I frame this, we'll talk about this first, and then we'll talk about some of the moves today and the gap up and so forth. But the way that I basically think about this in terms of the scenario that we have right now in the market and what we've been seeing now for months is, with the effect of the coronavirus, right? I mean, first of all, you see a whole bunch of people like putting out things on Twitter like, oh, this is the first time that this has happened, and it's the first time that this has happened since 1999, or this is the first time that this has happened since 2008, referring to like sentiment, the put call ratio, Nasdaq outperforming, S&P, and things getting overbought in terms of the Qs and momentum names. Well, I mean, there's logical reasons for this, and I kind of chuckle when I see people put this out because they're looking for a comparison, I guess, to 1999. Well, number one, like this is not why this is not 1999 is because there was an internet boom then, right? That's when basically the internet got going back in 98, 99. So there was a reason why things kind of went bananas to the upside. There was a lot of companies that weren't making any money yet, but it was the expectation of what the internet was bringing, and a lot of things got way over the tips of the skis. Now, could that be said for this environment now with a bunch of names that are doing extremely well because the country is shut down and people are working from home? In a year or 2 years, will Zoom video and will Teledoc and things like that still be up as high as they were, or will there be rotation out of those names into other names? So that's the kind of thing that you have to think about is at some point, whether it's 6 months, a year, 2 years, that's going to change. This country's not going to be working from home forever. And we hope sooner than later. Now, every time one of these, so yes, there's a lot of, and this is nothing new. We've been talking about this now for the last week, probably starting with last Friday, how I was saying that, watch the small caps. There's probably going to be some, and it would be fun, I was saying on last Friday, in last Friday's video, if there would be some type of rotation, or some type of move that would cause the small caps to rally. Well, what causes that? So what caused that? Well, the fact that they were under owned coming into this week, as well as when they talk about making, progressing on these trials for a vaccine, which again is going to be a long road, right? I'm certainly not a doctor, and I don't, the vaccine and whether the percentage of the cases that it will work and so forth. Bottom line, I don't know any of that stuff. But what I do know is I can kind of put this in terms of probability, meaning if they start to get closer, right? If there starts to be, and by the way, Moderna is not the only horse in the race, right? There's several ones. So as they kind of inch forward and get closer, it becomes the probability of a vaccine starts to move up a little bit. Once that probability of a vaccine, and again, I'm not talking about like 30 or 40% probability increase of a vaccine. I'm talking about like 5 or 10%. Well, that means that there's going to be a rotation out of a little bit of those stay-at-home stocks and those high growth names, and a rotation into some of the under-owned areas, like the travel names, and that includes the airlines, that includes the casinos, that includes various different travel, TripAdvisor, things like that nature, and of course the financials too, because the financials will do better if businesses can basically go back to work because they're funding a lot of the businesses. So, these things, and you have to remember, like, because if you think about it too much, right, thinking that like, oh well, this company's going to have trouble and this company's going to have trouble. I agree, but it's just a situation of some of these names are so beaten down that they're going to get a bounce to them. And clearly, we saw this. Like, if you look at if you look at, like, for example, UAL, which is up 14% today, they're not. The difference is that people are not going, jumping on planes today versus yesterday. It's the fact and the hope a little bit that inching forward, on a probability of a vaccine gets this group from bargain basement. I don't want to say bargain; that's the wrong word, but basically, basement levels, right? This UAL is has they gave back this whole bounce, right, for 3 or 4 days, or almost a week. UAL went nuts, as well as all the airlines did. I guess I could look at the Jets ETF rather than just. I'm not trying to be specific to this, but if they make even more inroads on a vaccine, what do you think is going to happen with this group? It's going to rally hard because people will be going on vacation. They're going to book trips. Now, I'm not saying that the airlines go back to where they were. I'm just being realistic that they're going to bounce, right? And that's kind of what my view of the airlines and so forth is. I don't really want to own these for an investment, but for a trade, they're going to bounce and there's going to be momentum, just like we saw back in the beginning of June, right? This group went from $12 to 20. So could that happen again this week? It could. I mean, this is kind of the first day that the Jets ETF did this, up 7%. And if all you have to do is look back a month, and it kind of tells you that, what's nice about options, for example, is that they can give you some exposure, and you only lose the premium of the option. So to me, it's kind of worth a little bit of a play. And I take note of what they're doing on the tape. So Boeing was a name that we saw repeat call activity in today, and I own a little bit of weekly calls. I made some money on them today, and then I rolled to a higher strike to lock in some profits. But remember what happened a month ago. So if Boeing is going to do something like it did a month ago, I want to have a little bit of exposure to it. Do I want to have it for an investment? No, because it's got a lot of problems, as well as all these airlines are going to have a lot of problems. But for a couple day trade, for a bounce, I don't mind having a little bit of exposure. That's the way that I look at it. Now, so again, I hope that kind of puts things in context, because again, I don't want anything to do with like owning some of these airlines for an investment. That's not what I'm talking about. I'm just saying that they could bounce, and for Boeing, I could see it possibly moving through value, or at least, halfway through to basically, between where it is now and to 208, and that's what I would be doing. Like if we get a bounce tomorrow in Boeing further, I would be taking some profits along the way, because that's a long way for it to get to 208. But I think this puts things in context when you look at, because I've gotten so many questions, even though this is a principle that I've gone over all week long, about how NASDAQ has been overcrowded, and that anything would get a little bit of a move out of NASDAQ stocks and the Qs. And you could see this is the Qs versus S&P, and this is, I've got just a 1-year chart up, and you could see how extended these things are. So when you're trading, put these things in perspective, because I think what happens with newer traders is they get wrapped up into names that are working for them really well. So not only the FANG stocks, but obviously all the software names, all the growth names, just basically high growth. and that covers a lot of different groups. But so traders get used to those names and they get a comfort level of, hey, this name has momentum, this name has momentum. But you have to realize when these things get super stretched, which is what they did, and you could see a lot of names have come off pretty decently. So the reason why I'm going over this, because I've gone over this basically every day for the last 7 days. But we talked about it in the macro video that I put out. I said, hey, I'm not looking for any more exposure in software. And my watch list, I try to have some different names to start the week, because you have to realize, and if you frame it into a risk reward type of framework, you could see like there's not much edge to being long a bunch of software names after they've rallied and gone basically vertical. So that's what you kind of have. I'm kind of summing up the last couple of days probability, but the reason why I'm going into this is because I had some questions today a few times, like, oh, the Qs are looking heavy. Well, yeah, there's going to be, there was news yesterday that is giving an incentive to kind of get back into some of these under-owned places. And the money it's not just new money that comes off the sidelines. People sell some things and they buy other things. That's called rotation, right? So that's what's happened. And again, this was a barometer of how far. I mean, where did you think this was going to go? Like, the other thing is, like, when I get people who are asking, who still, it's not making sense to them, where did you think the Qs were going to go to? Did you think they were just going to continue to rally every single day without any pullback? If you've been trading for a while, that markets just don't go up in a straight line. They come back and so forth. So again, and the bottom line, it's good to have in some of these growth names, it's good for them to take a breather. And I think if you've been trading for a while, you know that at some point when these things get really extended and overcrowded. Remember the Merrill Lynch Fund Manager Survey, which we talked about in the trading room yesterday, which is a survey of all big investment funds, said that tech is the most crowded trade. So, there's no doubt about that, right? So when that happens, there's no incremental buyer when trades get overcrowded. Okay, so just giving you a little bit more context. And another chart that I show every day is this growth versus value. Again, these things do for a bounce. Here I have small cap value in the numerator and small cap growth in the denominator. These things got way, way cheap, right? So due for a bounce, bear market bounce probably in terms of growth versus value versus growth. I said it backwards. All right, so today's price action. I joke around a little bit in the pre-market session, but what I basically say when we have a gap up like we had today, I tell you, straight out that if I wasn't managing a trading room, what I would be doing is taking profits around the open, and then it's a summer day, and then go out and have a blast. Go outside for a couple hours, because there's not much edge, in my opinion. If we start the day up like over 1%, which we did, SPY, the small caps started up about 3% for the day. There's not much to do. Professional traders, what they do is they take the gift when you have that type of a move overnight, and you take profits, and then you kind of wait and see towards the middle or the end of the day if some things have reverted back. But it's not a day, in my opinion, and again, everything that we're going through in this video is for information purposes only, not giving out any advice or recommendations. But days when we gap up like this, it's a day to take some chips off the table in the first half hour, and then go for a walk, or go to the beach, go to a park, go exercise for a few hours. It's not a day to chase names that are up, unless it's something extremely under owned. Like the airlines, which continued to rally throughout the session. I bought a couple things in the after hours session yesterday, like Las Vegas Sands. And this thing, I sold this on the open, and it continued to rally, and I put some back on at the end of the day. But I never know if we're going to get like a full reversion in some things. or something like we did like in UNP today, which was a frustrating to try to get out of that trade. But sometimes you have this, and the market makers are so wide that you can't get out of the trade reasonably, and then it reverts. Well, luckily this kind of hung in there for the day. This is one of the trades that I added yesterday, which again I like. UNP, right? So it's different, right? It's different than like some of the travel names and the airlines. I don't like those as investments. UNP, on the other hand, I think is a good quality name. It's rail. It's not an airline, and there's less COVID issues there. And I think this can break out and go a little bit and go further in that one. So again, big difference about how I'm thinking about that type of thing. But yeah, just to kind of continue here, that's when you get some experience underneath your belt, to not really push things. So you could see, for example, the diamonds gave back 60 basis points. So this column always that I'm showing here is what happened from the open, right? And we know over time that the majority of the money is made in the after hours market, right? It's not made over time buying the open and selling the close. The majority of money that's made in the market is buying the close and selling the open. So this was a good example of that. I mentioned that probably about once a week. And you could see the names that outperformed today. So first of all, the small caps I have highlighted, just big outperformance, and they needed it, right? I mean, they've been the underperformer, all year long. Also, the VIX, where the VIX is back down to 27 today. Remember that little spout that we had last week? That's kind of forgotten in the VIX. Now back below 28. The banks travel names, so things that we already covered, up over 5%, right? And with that kind of performance, when they catch that momentum, again, I'm kind of repeating what I said already, but you want to have a little bit of exposure when these things go nuts like this. The pot stocks all saw call activity too. I always think it's kind of funny that that's when you really are seeing. I do like to call it the dash to trash rally sometimes. When I see the pot stocks go up, these things are the worst. When I see them go up and when there's call activity in that, that you've got some rotation going on. Aerospace and defense did fine, up 3.5%, and then you had the energy names strong today as well. The semiconductors they sold off after the open. They finished down 1% for the day. Chinese internets, of course, China in the headlines too. So usually when China's in the headlines, it ends up being a dip, buying the dip opportunity. We saw that a few weeks ago too. A bunch of China headlines. This BABA is what I'm interested in. Because this thing has been going sideways for a long time. So a breakout and some type of retest in here, I'm definitely interested in doing something in BABA here. I just don't really have a signal yet. It might take another few days. This value area is very wide for the week. So perhaps this might be a trade that sets up for next week for Alibaba. And maybe I start a position. I do think, what's really key, sometimes I don't go over too many trade setups in this after hours video. The reason why is because we find so many setups during the day that and if I go over, through the market webs channels where I'm basically putting a whole bunch of different setups, like ENPH is a trade that I took today. But I'm really talking about, I think what's so important is strategy, right? Talking about what I've already mentioned about selling the open, and then being patient and letting things kind of develop and not overly chasing. These things are kind of make and break whether or not you're going to be profitable. The same thing, like after a multi-day rally, you want to be trimming. Right, and I know when everything goes up and there's a lot of things that look appetizing, you don't want to get over the tips of your skis, and you basically want to make sure that you're taking money off into the strength a little bit, right? And then you can regroup, like we had a little bit of a when we do get these dips, the one thing that's been really impressive is as I was talking about in yesterday's video, about how normally we get more than like a half a day dip versus what we saw earlier in the week. And the market is so strong right now that we get a little bit of a dip and buyers come right back. So we're so lucky right now. But you still have to be cognizant of the risk that you have out there. So watch your positions, watch your quantity of positions, and of course the size of your positions. And if a trade isn't working for you, there's no harm in taking it off. Don't have to be stubborn to try to get every trade work. So as always, I always show you all my trades. This is a trade blotter for the day. I have been holding some AstraZeneca. Again, you don't hear me do like too many. I do a few victory laps on Twitter, but I've been holding this AstraZeneca, and I don't know if we have any news on this yet. They were due for a study. AstraZeneca jumps. So yeah, it does look like scientists may have breakthrough vaccine. Wow, look at this. I'm going to put this in the trading room because that is out. So here we go. Um, yeah, so that's hitting the tape. So let's see what this does. But yeah, I will do occasional victory laps on Twitter. I'm human. But you'll find that most of these guys on Twitter, like, I'm always on to the next trade where you'll find out, like, guys with a lot of followers on Twitter, they're really good at victory laps. So I've been in this AstraZeneca for a couple weeks and just have had to be. I think it's been a couple weeks. I've been patient with this thing. It's been coiled, and so today, of course, I took off some of that exposure today, and SPWR, which I got a nice target on this trade, Masco. So I took off. I added a lot of a decent quantity of trades. I wanted to make sure that I was taking off in the first hour, and especially some of those trades that if I had a higher quantity of names, I wanted to make sure, like Fastly, I got out of. Just having to force some trades off your books a little bit so that you're mindful of your risk. All right, guys, that's it. I want to read more about what's going on here in AZN, and so that's it for today. ENPH again. I'll just show you my trade blotter again. But there's a number of other setups. So that's that is the one thing that you kind of have to be mindful of. Is that you want to be taking some profits and then just looking for things that have good risk to reward setup. This Chipotle looks great to me. I think this thing breaks out ahead of earnings. Right, this earnings I think is next week. Right, so there's plenty of setups that we're still seeing. You just have to manage your risk appropriately. Have a great night, everybody. See you tomorrow.